Somewhere right now, a 68-year-old is opening a bank statement, and a fee just came out of it, a fee the bank was never supposed to charge them again. They do not know that. Nobody told them. Here is the truth nobody says out loud. After you turn 65, 3 separate places quietly keep billing you for money you no longer legally owe. The tax office, your bank, your local property office. None of them are breaking the law. None of them are doing anything illegal. They are simply staying quiet and letting the bill keep arriving the same way it always has. Are you one of the people this is happening to right now? You might not even know it yet. Stay with me for the next few minutes, because by the end of this video, you will know exactly what to check, what to ask for, and what to say to get it back. This is not complicated. It is not risky. It is just information that should have reached you already and did not. The tax breaks sitting unused on your return. Let us start with the tax office. In the United States, once you turn 65, the IRS gives you an extra standard deduction, not instead of your normal one, on top of it. For 2025, that is $2,000 extra if you are single. $1,600 extra for each spouse if you are married. Nobody adds this for you. You have to check a small box on the form yourself. If you have used the same tax software or the same preparer for years, ask yourself honestly, do you actually know if that box has ever been checked? There is a second break most people never touch. Medical costs above 7.5% of your income can be deducted, not just hospital bills. Hearing aids, dental work, glasses, prescriptions, supplemental insurance premiums, long-term care costs. Add a full year of that up for a typical retired couple. It moves fast, faster than most people expect. And once you cross that line, every dollar above it is a dollar the tax office no longer has the right to bill you for. Here's a number that surprised me the first time I saw it. The age you are forced to start withdrawing from retirement accounts has moved twice in recent years. It used to be 70 and a half. Then it moved to 72. Right now, it sits at 73. And current law has it scheduled to climb again to 75. That is years of extra time your money can sit there, untouched, still growing, without the tax office reaching in for a slice. Think about David for a second. 71 years old, lives in Florida. For 6 years, he filed his taxes the exact same way he always had. Never checked the senior boxes. Never tracked his medical bills. Assumed the software would just handle it. His daughter looked at his return one afternoon and asked one simple question. Dad, did you claim your age deduction? He had not. 6 years of it, not thousands of dollars in one shot, but real money, year after year, that simply never made it into his pocket. In the United Kingdom, the version of this is different, but the pattern is identical. HMRC will not chase you down to tell you about marriage allowance, where one spouse can transfer part of their tax-free allowance to the other. They will not chase you about pension credit either, which many pensioners qualify for and never apply for, partly because they assume their income is too high when it often is not. Free money, sitting there waiting for a form nobody mailed you. Has anyone ever actually sat down and checked your return line by line? Or has it just been done the same way year after year on autopilot, because that is simply how it has always been done? The bank fee you are still paying by mistake. Now let us talk about your bank. Most large banks charge a monthly fee just to hold a basic checking account, somewhere around $10 to $15 a month. That does not sound like much on its own, but add it up over a year and it is well over $150. Quietly gone, for the simple privilege of keeping your own money somewhere. Here is the part they will not print on a poster in the lobby. Many of these same banks waive that fee completely once you turn 65. Sometimes automatically if you have direct deposits set up. Sometimes simply if you ask. Honestly, most bank staff will not bring this up unless you do. It is not that they are hiding it out of malice. It is that if nobody questions is revenue, nobody has to give back. I want you to picture Margaret, 68 years old, paid the same $12 monthly fee for years without ever questioning it. Assumed it was just the cost of having a bank account in the modern world. One afternoon, she finally walked in and asked the teller directly, "Do I qualify for a senior fee waiver?" The fee was gone by her next statement. No paperwork battle, no argument, just one sentence, years overdue. There's a bigger piece to this too, and it matters if you keep more than a small amount sitting in one account. The government agency that protects bank deposits only covers up to $250,000 per person, per bank. If your balance sits meaningfully above that in a single account, part of it is technically unprotected if something ever went wrong with that bank. You do not need to panic about this. You simply need to know it. So you can decide for yourself whether your money is spread the way you actually want it to be. In the United Kingdom, this shows up differently. Some building societies and banks offer fee-free basic accounts or meaningfully better savings rates specifically for people over 60. Barely advertised, rarely mentioned at account opening, sitting there waiting for someone to ask the right question. Are you paying a fee right now that you have simply never questioned because nobody ever gave you a reason to? The property bill that should be smaller. And finally, your local property office. Most states in the U.S. have some form of senior property tax relief. A frozen assessment so your bill does not rise even if your home's value does. A flat reduction taken straight off the taxable value of your home. In some places, an actual rebate check mailed back to you every year. Florida offers a homestead reduction for owners 65 and older. Texas freezes part of the property tax bill at the year you turn 65, so future increases in that portion simply stop. New York has an enhanced exemption that lowers the taxable value of a senior's home by a meaningful amount every single year. Every one of these is real. Every one of them is written into law. Almost none of them apply automatically. There is a form, usually a deadline, early in the calendar year. You typically need proof of your age, proof you own the home, and proof it is your main residence. The county will not call you about this. They process too many bills every single year to chase down every individual homeowner and explain what they might be missing. So they simply mail the full amount, and most people simply pay it year after year without ever asking the one question that would change it. In the United Kingdom, the equivalent sits inside council tax. Many councils offer a council tax discount or reduction for pensioners on a lower income, and being on pension credit can unlock an even larger reduction. Again, you generally have to apply for it yourself. It is rarely offered to you first, and it is almost never explained clearly on the bill itself. Has anyone ever actually confirmed whether your property bill already reflects a senior reduction? Or has it just always looked the same bill after bill without anyone checking? None of these three places will contact you first. Not the tax office, not the bank, not the county. The system is built to wait for you to ask. So build one habit once a year around your birthday, since that is an easy date to remember and tie it to. In the U.S., request a free transcript at IRS.gov and check whether your senior deductions were actually applied to your return. Call your bank and ask directly for a senior fee waiver using those exact words. Search your state's name together with the words Senior Property Tax Exemption. Find the deadline and mark it somewhere you will actually see it. In the UK, check your personal tax account on gov.uk and confirm whether marriage allowance applies to you. Confirm whether you are on pension credit if your income is anywhere near the threshold. Contact your council directly and ask plainly whether a pensioner discount applies to your council tax band. 30 minutes, once a year. That is genuinely all it takes to stop 3 quiet leaks at once. If this helped you in any way, there is one small thing you can do. Hit subscribe. Not for me, for you. Because every single day this channel puts out honest, plain-spoken guidance built for people exactly like you. No selling, no jargon. Just the information you deserve to have had years ago, delivered the way it always should have been delivered in the first place. And if there is someone in your life, a parent, a sibling, a neighbor who still keeps paying full price for things they no longer owe, send them this video today. It costs nothing. It takes less than a minute. And it might genuinely change their year. Take care of that money. You earned every part of it. Tomorrow I am sharing something that could save you even more than what we covered today. Subscribe now and I will see you then.